Hello, my Bitcoin friends. Together, we are riding this rocket ship of Bitcoin up to the moon and beyond. In fact, we're going all the way out into deep space because we are achieving escape velocity. In this video, I'm going to be talking about why Bitcoin is like a rocket ship, how escape velocity inevitably is either going to work against you or with you. We're going to go through the math over the course of the next 10 to 12 years or so, and also we're going to be looking at the past data to be able to predict what is the compound annual growth rate for Bitcoin in the future. But without further ado, let's get into it. What do I mean by escape velocity? Well, this is a picture of the Starship that you see here on the left. And this is, of course, Elon Musk's rocket. Surely you've heard of it or seen pictures or maybe even videos of it, right? And this is the difference. You can have 1,000, 100,000, or a billion little bottle rocket ships from 8th grade that shoot up 100 feet into the sky, but then all of them come back down onto the planet, right? It does not matter how much thrust you have. What matters is if you have enough thrust concentrated that you're able to escape the gravity well of the planet, right? You can have more energy than 10 starships in a billion or 20 billion or however many billion bottle rockets you need. But if your rocket can't achieve escape velocity, it is not going to get you where you want to go. And having one rocket that can achieve escape velocity is inherently worth an infinite number of rockets that cannot achieve escape velocity. This is the difference between Bitcoin and political currency. Bitcoin is the rocket. This is the starship that takes you into the moon, the stratosphere, and into deep, deep space. But political currency, these are your little bottle rockets. They're getting 2% worse every year and eventually crashing back down to Earth and going to zero because they can't compete against the gravity well that is the greed and manipulation of political currency. Now, how much Bitcoin do you need to ride this rocket ship? Well, what's important is you get any kind of seat on the rocket ship. I don't care if you have 10 Bitcoin, 80 Bitcoin, or 0.2 of a Bitcoin, or even not even a million sats, right? Whomever you are, wherever you are, what's much more important than how much you have is getting on the right rocket ship. However, the ticket for this rocket ship is now out of reach for most Americans, or at least the one Bitcoin class. The first class seat is now out of reach for the vast majority of Americans. I know that might sound a little crazy to some people. I know that might sound pretty obvious to other people, but let's go through the math backing up why I believe this is the case. Let's take some assumptions because we need to have assumptions here. Let's assume that Bitcoin is $100,000 at this time that they start buying, right? Maybe Bitcoin's $100,000 at the time you're watching this video, inherently in the future for myself. Maybe they started buying at $100,000, months ago, maybe even 8 months or a year ago or so, right? But whatever the case, they started buying Bitcoin when it was 100 grand. Okay. And now we're also going to assume Bitcoin has a compound annual growth rate of 30%. You may agree with that number. You may disagree. I'll get more into the math in just a moment of why I believe that that is very, very probable as a growth rate. But these are our two assumptions. An American is buying at $100,000 of Bitcoin. That's when they start. And there's a 30% compound annual growth rate. Now, let's say that this American in question here is saving approximately $1,000 per month for retirement. That is already pretty well above average. In fact, the average for Americans, what they're saving for retirement, is about $964 per month. So a grand a month is something that is definitely, average or above average, again, mostly depending on what age range you are, right? A 20-year-old saving $1,000 for retirement is way above average versus somebody in their 40s or 50s or so, right? However, let's say this person not only is beating the average and above average, but they are 4 times higher than this average. Let's say that they are saving $4,000 per month after taxes to allocate to their retirement plan. And let's say they put half of that into Bitcoin. Now, keep in mind, this is somebody with a very high income. If they're putting $4 grand a month into retirement vehicles between maybe their 401k, their Roth IRA, Bitcoin, or other things that they have in their portfolio, their life. Keep in mind, this person is saving at least probably, pre-tax income, probably like 55 or 60 grand a year, right? And since most people, the average savings rate here in America is only 4%, clearly this person is significantly above average. This person probably has an income of at least $100,000, potentially even $200,000 or more $1,000. And I've met some people that make literally a third of $1,000,000 to $500,000 a year that don't even save this much. It's crazy, the amount of financial degeneracy here in America. But let's say this person decides to save $4,000 a month to their income. And let's say they've been watching more videos of myself. Let's say they've been subscribing, right? Just like all of you hopefully have doing. Shame if you haven't subscribed. But let's say this person has subscribed to Loop Royals and all the other wonderful Bitcoin content creators out there, and they've decided that they've gotten enough conviction, they're going to diversify. They're going to allocate half of their portfolio into the high-risk speculative political currency gambling Ponzi scheme, and now they're going to finally start allocating the other half into secure, long-term, energy-backed monetary currency units that are Bitcoin. They're going to take 50% and go the lower risk route of Bitcoin now they're starting to understand it, and they're going to only retain 50% into the high-risk gambling speculations of the American political currency system. So they're saving $4,000 a month. They're putting $2,000 into Bitcoin. They're putting $2,000 into their traditional vehicles. A consistent $2,000 dollar cost average over the course of the next roughly 12 years or so will reach one Bitcoin in 2036 when it is roughly $2.3 million a coin. So let's say they started buying with that monthly DCA back in late 2024, early 2025, right? Their class of 2025 or whatever in Bitcoin lingo, and they're stacking $2,000 a month. That's a lot of money to a lot of people. To other people, it's not a lot of money, right? A lot of my clients I talk to, are stacking, literally $5,000 or $10,000 of Bitcoin a month, right? And sometimes with big lump sums from the selling of businesses or of homes or of, cashing out of 401ks or whatever the case. All the time I'm helping people make $50,000 or $100,000 or $500,000 Bitcoin buys. It's very frequent, right? And by the way, if you're going to do that, you should strongly consider an over-the-counter desk instead of using an exchange, because you're going to get a much better exchange rate with that. But that's a different topic for a different time. Point is, let's get back to the DCA. $2,000 a month over the course of about a dozen years will get you approximately one Bitcoin, or just over one Bitcoin, when Bitcoin is about $2.3 million in the mid to late 2030s. Now let's go through the math here of actually showing you the scenario here. I made a little mistake that there's two 11s. That last one should be a 12. I get it. But assuming they're starting in 2024, we're still getting to 2026 in this theoretical scenario. So Bitcoin price starts at $100,000. It increases by 30% every single year on average. Some year it doubles, other years it halves, right? Like we've seen this in the last couple of years alone, when Bitcoin's gone from 16,000 all the way up to above 116,000, right? And now, well beyond, right? Beyond that. And so the point is that we've had way more than 30% CAGR the last couple of years. And so obviously, a 30% CAGR, I don't think is that unreasonable. And again, in just a moment, we'll get into the math of why I think that's the case and the data backing that up. But the assumption here is 30% CAGR. They're DCAing $24,000 a year, $2,000 a month. This means that in their first year, they get nearly a quarter of the way to one whole Bitcoin. The following year, they get 18.5 million Satoshis, then 14.2 million Satoshis, then 10 million sats, 8 million sats, 6 million, 5 million, 3 million, 2 million, 2 million, 1 million, 3 1 millions in a row, right? This is the point, that early action is worth way more than later action. Okay, taking a bit of a bold step today is better than taking a much larger bold step tomorrow. If this person had put 100% of their retirement savings into Bitcoin over the course of the first 3 or 4 years, I am sure they would have outperformed having a 50% allocation over a 12-year timeline. I think that would have been a better scenario, but that's not how most people work, and that's totally understandable. Not everybody has the conviction or confidence in Bitcoin that you and I have, right? But at the end of the day, this is a realistic scenario, in my opinion, for somebody that is saving 50 grand roughly a year for retirement. They're willing to put half of their newly contributed capital into Bitcoin. They will end up getting Bitcoin well over a decade from now, when Bitcoin is a couple $1,000,000 a coin, when it's done a rough, whatever, 20x or so from here, right? Now, in the real world, this is an exceedingly rare exception. Most people in the real world aren't saving $1,000 a month, let alone $4,000 a month, right? And again, we're talking about Americans, okay? Americans, like 40% of us, are living paycheck to paycheck or have less than $1,000 to cover an emergency. If we don't even have $1,000 to cover an emergency, most Americans don't have $1,000 to save for their retirement every single month. And again, Americans, we're talking about a very wealthy, 3, 4, 5% of the world, right? The reality is that there are billions of people that don't have $1,000 to save at all. There are billions of people that don't even have $1,000 or $10,000 of savings. So when people say, oh, buy one Bitcoin ASAP before it gets priced out of reach, or before the rich dogs buy it, before the politicians buy it and pump it up, like, my friend, we're already there. One Bitcoin is already out of reach of 99% of the world population. Pretty soon it's going to be out of reach of 99.9%, don't get me wrong, but it's already achieved escape velocity. This is escape velocity working against you in a zero-sum game of achieving a given status level. Okay, 10 years ago, the status marker was 1,000 Bitcoin. Then it was 100 Bitcoin. Then it was 10 Bitcoin. We are leaving the station with 1 Bitcoin. The next wealth status marker is going to be 0.1 Bitcoin. And 10 years, 20 years from now, it's going to be 1% of a Bitcoin. In the far future, it'll be 1,000th of a Bitcoin, right? Of course, the time duration between each of these new targets is growing because of the law of large numbers. But at the end of the day, this is escape velocity. No matter how much you DCA, no matter how much you save, for the vast majority of people, it is a true statement to say, no matter how much you save, you will not be able to catch up with your stacking goal because the rocket ship that is Bitcoin is escaping the atmosphere in slow motion in real time. And no matter how hard you work, you're not going to be able to keep up with it because that gravity well is pulling you down of political currency declining when priced in Bitcoin. So my encouragement is for you to work as hard as you possibly can to reach your personal escape velocity where portfolio management, security improvement, tax mitigation, and asset protection is worth more than your traditional income. This is one of the reasons why I joined the Bitcoin Advisor years ago. Yes, as a client, but also as being one of the team members on the team. I was the first American on the team. This is why it's so important. Our average client, and we have over 500 clients, our average client increases their Bitcoin stack by about 70% in the first 12 months. A lot of people ask me, Luke, how on earth can that be true? How on earth could you help me stack 70% more Bitcoin? Blah, 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 whatever, right? But the reality is that the more wealth you have, the easier it is, ironically, to help you stack more. See, people with a zero-sum mindset that are thinking from the terms of 8th grade bottle rockets, what they think is I make 50 grand a year, and so if I want to stack 70% more Bitcoin, I got to increase my income 70%, or I got to do this or whatever, right? But if you're selling your time for income, well, then of course that's going to be the mindset that you have. But if you're looking at things from a lens of portfolio management, you understand that if somebody, let's say, is making $200,000 a year, but they got $10 million of Bitcoin, what's the easier thing to do? Help them increase their income by 70% or help them optimize their portfolio by 70%? Obviously, it's going to be the portfolio because obviously, even if you increase your income by 70%, even if you're making multiple 6 figures, but you got a 7 or 8 figure portfolio, you don't have to increase your income by 70%. You got to increase it by like 700, if not 7,000%. And so the reason why it is not necessarily that difficult to increase your Bitcoin stack significantly is that if you have achieved escape velocity, you get access to things that other people don't have, right? And I'm just being real here, right? There are clients of mine at Bitcoin Advisor that have access to products that are not available on the general market. They have access to loan products that are not available to everyone. They have access to IPOs and treasury companies before they've gone to market, before they've gone to public, right? And so, sure, you can ask, is this or is that Bitcoin treasury company better to buy at this multiple, at that multiple? Well, it's just better to be in those rooms before the stocks come out, right? So, however the main goal optimization is for that person, you get better tax treatments, you have better tax planning and trust planning, you have better opportunities with Bitcoin treasury companies, you have better opportunities with Bitcoin loans, all those things. And this is why that actually it's so important to achieve this escape velocity, because once you reach this point, then you can justify reducing the number of hours you're working at your traditional job, increase the number of hours you're spending focusing on increasing your Bitcoin stack. And eventually that optimization is going to be worth way more than optimizing your income. Basically a 5 or 10 or 20% increase in your Bitcoin stack is going to be worth way more in an ROI on your time investment than trying to double or triple or quadruple your income, right? Basically, it's a forced retirement. It's a beautiful, wonderful thing that eventually Bitcoin grows so much that no matter how much harder you work, it doesn't really move the needle. And it's much more cost effective to focus on how to move the needle to increase your Bitcoin stack. So this is why achieving escape velocity in your favor as a tailwind instead of a headwind is so critical and so important. Let me give you an example here. If your Bitcoin stack is worth approximately 20x your annual expenses, you theoretically can easily afford to spend 5% of your Bitcoin stack every single year and never run out of purchasing power, despite the fact that your fiat spend is increasing by about 20% or more a year. If the Bitcoin CAGR, if the Bitcoin compound annual growth rate is 20 to 30%, you can easily afford to spend 5% or so of your entire Bitcoin stack every single year. So if, for example, you were starting with 1 Bitcoin, and again, we're assuming that Bitcoin is $1,000 at the time you started doing this, and we assume, again, a 30% compound annual growth rate, and we assume you start spending 5% of your Bitcoin stack, you still end up with almost 2/3 of a Bitcoin in the year 2036 with an annual income of about $72,000. And this is the kind of thing that people say that, is not going to be enough, or, I need more than 1 Bitcoin and blah, 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 whatever. But the reality is that if you just wait a few years, this is going to be something that's very, very significant. Obviously, this is not something I would do necessarily, because 5% of 1 Bitcoin at $100,000 is only $5,000. Now, most people that have enough net worth that are available to stack one Bitcoin, most of those people can't live on $5,000 a year. There are plenty of people in other parts of the world that definitely can, but here in America, it's exceedingly difficult to live on $5,000 a year, right? And so, scale this math up to whatever you want. Maybe you're looking at a 10 Bitcoin stack. If you spend 5% of your 10 Bitcoin stack, you'll be able to live on roughly $50,000 a year starting now. But then, roughly a dozen years or so from now, you'll be able to have $750,000 of income in fiat terms, despite having still 6.2 Bitcoin worth roughly $13 million or so, right? This is the beauty of escape velocity in your advantage. And so I'm telling you, this is inevitable. You're going to go down one of these two paths. Either you're not going to buy Bitcoin and the escape velocity is going to catch up away from you and you will never reach your Bitcoin stacking goal, even if you're increasing your income, or you can have a conversation with somebody that this is literally what they obsess about all the time, right? Not only for my own portfolio, but for my clients, right? This is why I joined this team, because learning from how other people, how they're increasing their Bitcoin stacks with our team of 40 people, 40 experts that have a third of a millennia of Bitcoin stacking and portfolio management and asset protection experience between them, right? This kind of experience gains knowledge from me. It helps me increase my Bitcoin stack. It helps our clients increase their Bitcoin stack by typically double digits on average, right? Some people increase their stack by 10%, other people by 500%. But depending on how big your stack is, that can be a big change. For somebody with 200 Bitcoin, increasing their stack by 10% is a really big deal. Helps them make a couple $1 million in a single year. For other people that maybe have 2 Bitcoin, helping them increase their stack by 50% or 60% maybe is a much smaller dollar amount increase for them, but for their lifestyle, it helps them achieve that escape velocity a couple years earlier. And the faster we can achieve that escape velocity, the faster we can increase those Bitcoin returns and keep the flywheel going. And the same way that Bitcoin treasury companies have a flywheel for their corporate balance sheet, you should be looking into how to create a flywheel for your balance sheet. Of course, most people are doing this entirely wrong in ways that are exceedingly high risk that are really frustrating for me to see. There are ways to do this with excessively low risk at increasing your Bitcoin stack consistently over time. So either way, you're going to have escape velocity. Either the escape velocity is in your favor, where you're increasing your Bitcoin stack every year, and because Bitcoin's going up in dollars every year and your expenses are capped in dollar terms, then you have a forced retirement, or escape velocity is going to be working against you. Political currency is the planet's gravity well trending towards financial destruction. The planet Earth is the example of the monetary debasement pulling you in, sucking you down. It's this ever-present force taking you in ever further, right? But Bitcoin is a tool that we've invented. It's a rocket ship that helps you escape the gravity well, and for the first time in human history, just like with the Starship, well, not the Starship literally, but just like, the first rockets that made it to space, right? For the first time in the history of the world, we have a technology that can escape this gravity well that's been ever present for every single person that's lived on the planet. Bitcoin is this tool to help you escape the burden and the chains of the gravity pulling you down of political currency. And then, of course, once you make it to space, you can go on and on and on indefinitely. And eventually, when you find a black hole, you reach the singularity of that black hole. Bitcoin is that monetary singularity, and you never return. Bitcoin is the gravity well that you never can escape, but it's the one you don't want to escape. Once you go into Bitcoin, once you go to the closed system of the black hole that is Bitcoin, you don't want to leave in the same way you want to leave the planet of financial ruin. If you're liking this video, please subscribe. It means a lot. I make these videos for free. Please, it helps a lot. It gets the message out there, gets the video out there. It gets YouTube understanding that this is content you want to see. And also, it helps me get better feedback of what kind of videos you like and helps me better understand how to best serve you and make the content you enjoy seeing. So if you like this video, please like, subscribe, and comment. Now, there's a great question that this person asked. He asked, if I don't want to sell my Bitcoin, do you recommend using Bitcoin for loans? Now, of course, this is something I do for clients all the time. It's always a great question, but yes, this is literally, a big part of my job, helping people, figure out what to do. Now, again, to make this very clear, I think this is something that needs to be discussed. You can just sell your Bitcoin and you'll achieve escape velocity, right? Honestly, you probably don't need as nearly large of a stack as you think in order to achieve that escape velocity, right? You may have to wait 5 years, you may have to wait 10 years for the Bitcoin to grow enough to where now you've achieved that escape velocity level. However, you probably don't have to wait 40 years. If you're just dollar cost averaging and saving consistently in Bitcoin, you're probably going to be just fine. Even this person that is not going to reach one Bitcoin stacking goals for another decade plus, even they will be fine. A 10-year waiting period is much better than a 30 or 40-year waiting period in political currency. And even with, treasury bonds, you probably never reach escape velocity. With how low interest rates are. You could have a portfolio of $5 or $10 million of treasury bonds, and you don't even have enough income from the interest to help you keep up with the inflation and the rate of destruction with your treasuries, right? It's like a bottle rocket that you're pointing down into the ground, right? It's not a good idea. But the point I want to make here is that there's nothing wrong with selling some of your Bitcoin to live off of it, right? I mean, that's what some OGs are doing now when they're selling Bitcoin at these higher prices. But for me personally, I would rather do a different route, because with some intelligent leverage, you can reduce the number of Bitcoin you need to achieve escape velocity. Let's say in this scenario, you needed, to have roughly 5% of that Bitcoin stack worth as income, right? Well, you could sell 5% of your Bitcoin every single year to live on it, or you could take a 5% loan against your Bitcoin. And then all of a sudden, since you're not selling it, the remainder of that portion is on your balance sheet. And as long as that's compounding at an interest rate higher than the interest rate you're paying, minus, the cost of the cash flow, if you have a loan with the cash flow, right? The point is that if you are using intelligent, low interest rate, long-term debt, all of a sudden, things make a lot more sense, and you can achieve that escape velocity potentially years earlier than what your current trajectory is. And now a couple years doesn't make, a huge amount of difference on the long-term scale of a hopefully multi-deca retirement. But the reality is, if you achieve that escape velocity just a couple years earlier, when Bitcoin is significantly cheaper compared to the future like it is right now, then the reality is that the faster you achieve that escape velocity and you buy back some of your time, the sooner you can enjoy more time with the family. And from a financial perspective, just as important, the more time you can spend on figuring out how to increase your Bitcoin stack. If that's something that has an interest to you, that you want to figure out how to use loans or other kinds of products to increase your Bitcoin stack, please reach out and have a call with me. The reason why I make this known is not because I'm necessarily recommending you to take out Bitcoin loans. This is not financial advice. However, what most Bitcoin content creators do is that they partner with a product, and there's nothing wrong with this, right? But they partner with a product and that company gives them money as a function of a marketing budget, and then they promote that given company. In my opinion, just because a company has a large marketing budget that they push out to a lot of people on various kinds of content streams does not necessarily mean they have the best products out there. There are lots of products out there that don't market themselves as well because, frankly, they don't need to market themselves as well. They work with advisors like myself or the team of mine at Bitcoin Advisor, or they work by word of mouth, or they work only for the high net worth clients, right? Why, if I have a really good product, why would I spend a boatload of money, paying a bunch of content creators to promote my company, trying to get 1,000 people to each have a $10,000 loan with us, when instead we could just work word of mouth, give somebody a product that's not available for the public market and just give them $1 million loan, right? It's much easier to work with one client with $1 million loan than it is to work with, 1,000 clients with, $1,000 loan or whatever, right? So the point is, if you're somebody that has a Bitcoin stacking amount that you feel like you either can currently retire on the Bitcoin amount, or you're trying to get to that point and you're looking at that the next, let's say, 3 to 5 years or so, feel free to reach out. Let's have a conversation. My role as a Bitcoin advisor at the Bitcoin Advisor is that we are tech agnostic. I don't care if you do a loan or not. I don't care who the loan is with. I don't care what the term is, but at the end of the day, my common incentive structure with my clients is help them figure out how to end up with as much Bitcoin as possible consistently over a long period of time. Some of the loan products we have available are Bitcoin treasury loans that are up to a 5-year term with a 5% interest rate denominated in Bitcoin, but there are also fiat loans available. There are fiat loans with various kinds of Bitcoin mortgage products that are 5-year, 10-year, in some cases even 15-year loans at sub 5% interest rates. Other kinds of products, of course, have a bit more risk with, a higher interest rate. But the reality is that it's my job to help you get connected with the product that's not just good, but that's best and that's the greatest for you and for your goals. So if you're somebody trying to achieve that escape velocity, reach out to me. I'm more than happy to have a conversation. Information's on the screen or in the description down below. This is something that I've done now for years, and I'm looking forward to doing for many, many years into the future, because this is the number one problem that Bitcoiners face. Most people in Bitcoin don't have enough Bitcoin, but then once their Bitcoin reaches this escape velocity that I'm talking about, now all of a sudden, protecting the Bitcoin they have and increasing that stack is the newest, highest ROI in their investment. Now, there's one more criticism that I want to address before we wrap up this video here. The whole assumption of this video that I've been talking about now for about 20 minutes here is this idea of a 30% compound annual growth rate. And a lot of people would complain that 30% CAGR is a pipe dream and is not realistic in the slightest. As the market cap grows, I am surprised you've even entertained that thought. Luke, how dare you be bullish on Bitcoin? How dare you be bullish on the monetary singularity that the president and that Putin and that every politician is talking about and that everybody is buying? How dare you be bullish on the debasement of political currency? Oh, Luke, this is insane. But really, I find this criticism entertaining. Why? Because if you actually look at the math here, if you actually look at what's going on, my post here, this whole assumption of this entire video is assuming a 30% CAGR from 100 grand for approximately 12 years. I'm not saying literally forever. I'm just saying for about 12 years. This is the scenario that we're looking at here. That projects roughly a $2.329 million Bitcoin in the mid to late 2030s. Now, what is the power law model? A lot of people criticize the power law because they say, oh, the power law is going to break because it's too bearish or it's too negative, right? But the reality is that the power law is still really bullish. And in my opinion, it is going to break if you're measuring it in terms of US dollars, because the US dollar debasement is an exponential, not a power law, but that's a conversation for another video. The point is, the power law model predicts at the same point in time, roughly a $2.3 million Bitcoin. So the point is, even if you're looking at a straight exponential 30% CAGR, or if you're looking at a power law model, which of course I would argue is much more realistic than just an exponential CAGR going up indefinitely in terms of real purchasing power, not in terms of fiat debasement. The point is, I think it's totally reasonable to be expecting roughly a $2 to $2.5 million Bitcoin in the late 2030s. Some people commenting down below are going to be saying, Luke, you're not bullish enough. We're going to have $2 million Bitcoin in the next 18 months. Good for you. I hope you're right. That would be awesome. That would be really cool. But just planning here for the future, right? Because again, we're focused on long-term planning. We're focused on if-then scenarios. And, for me and my worldview, I like to look at history, at the previous CAGR, and I like to look at things that I think are hard to dispute, like, let's say, the power law, when in terms of real purchasing power, not in terms of the exponential decay of the dollar. And so the point is, I think that a multi-million-dollar Bitcoin is totally within the realm of possibility in the mid to late 2030s. And if you don't believe me, just look at history. This chart here is from Wicked Smart Bitcoin. Excellent guy on Twitter. He's got some awesome charts. Highly encourage you to check him out. But the point is, what you're looking at here is the compound annual growth rate over trailing periods of time. You have the 12-year, 10-year, 8-year, 6-year, and 4-year CAGR for Bitcoin over the last period. But looking at the most recent 3 periods on this chart here, the trailing 4 years before this time, the compound annual growth rate for that period is 25%. The trailing 6-year compound annual growth rate is 49%. And the trailing 8-year compound annual growth rate is 50%. And what's really important here to notice about the 4-year compound annual growth rate is you're looking at this purple line here that is literally pricing it from the top of the previous cycle. So even if you were buying the top of the previous cycle in 2021, and now you rode down through the bear market, not considering, the factor that you bought and DCA'd in the bottom, right? Hopefully, if you were subscribed to my channel, you were. And then Bitcoin went up, right? Even if you're buying top to top, right, you're still looking at a 25% compound annual growth rate on average, right? Even with the 50 to 70% drawdown we saw in 2022 in that bear market, we're still looking at a 25% compound annual growth rate. So I do believe genuinely that a 30% compound annual growth rate is realistic over the course of the next 10 years or so, right? Maybe it's higher, maybe it's less. I don't know. But when we're trying to think ahead here and plan, that's what we got to look at. Now, a lot of people that are crypto degenerates and they don't properly understand Bitcoin, they would also say that I don't think a 30% CAGR is realistic. Maybe in the past that everybody has seen Bitcoin run. If this is accurate, an expectation, forecast people knew, no one would be buying anything but Bitcoin, blah, 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 right? Eventually, of course, when you do, 2 minutes of research on this guy, you figure out that he, isn't as much of a Bitcoin bull as you think, right? You can have all the charts in the world proving that Bitcoin's just going to continue going up, but a lot of people are going to be disappointed when they see that actually Bitcoin is going to go up. So the point is, people's number one problem, even people that follow me online, people's number one problem is that they are not bullish enough on Bitcoin. Your number one problem is that Bitcoin is going to outpace the rate at which you're buying it. Your number one problem is not that you're too late to Bitcoin. Your number one problem is that Bitcoin is a rocket ship to the moon and it's going to have escape velocity one way or the other. You can sit on the sidelines and not be a part of the rocket ship and watch it forever escape beyond you selling your time for income, or you can get on the rocket ship. You can bring somebody like myself alongside with you that has a common incentive, not to be a person selling various kinds of products to you, but to be somebody in a service-oriented mindset, being tech agnostic to whatever product or loan or institution you're using, but helping you figure out how to increase that escape velocity. So you can sit on the sidelines and let escape velocity work against you as a headwind, or you can let Bitcoin be your rocket ship to the moon, and you can have a massive, massive tailwind with you. And if you do that, you're going to retire many years earlier at a much higher standard of living, and ultimately, you're going to be doing so much good for the world. For me personally, I don't plan on using 90 to 99% of the Bitcoin that I have. I'm probably going to give it away or donate it or whatever over the course of my lifetime. And for most of you watching this video as well, it's probably going to be the same thing for you. Once you achieve escape velocity, Your focus is increasing on the Bitcoin stack, but eventually you're going to have so much money, you don't even know what to do with it, because even if you lived a lavish lifestyle, you'll never run out of money. And so that's where the conversation gets really fun, and we can have a conversation about what do you do to make the world a place that is even better and something that you want to see in the world. So thank you for watching this video. Please subscribe because I make all this content for free. Of course, reach out if you want to have a conversation about Bitcoin loans, retiring on Bitcoin, or achieving that escape velocity and, essentially increasing your Bitcoin stack with as little risk as possible. Otherwise, I'll see you in the next video, and thank you for riding this rocket ship with me to the moon. It is a really fun and really wild journey. Thanks.